This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March the 6th, 2015. It's a Friday. Our time is 8:40 Mountain. Our radio show runs on your favorite radio stations, including 630 CHED in Edmonton, Sunday at 3 in the afternoon. We are on at 10:30 in the morning on Sunday due to Edmonton Oilers hockey. The Oilers playing the Carolina Hurricanes at 1 o'clock, pregame show at 11:30. And don't forget the time change. Clocks went ahead 1 hour at 2 a.m. this morning. Our show is on from 10:30 until the pregame at 11:30. Oilers, Hurricanes, 1 p.m. Don't forget, our radio show is archived. If you ever miss a radio show, they're on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. HESradio.com and rarecoloreddiamonds.com. We have a podcast. It's interesting. I was reading this week, there's roughly in North America 50 million people that listen to a podcast every week. And, we'd be happy to have maybe like 1% of that or 10%. That would be very good. If you'd like to listen to our podcast, you can listen to it through iTunes. Type in the World Financial Report on Radio. We are portable. Our podcast goes anywhere you do. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. You can speak with him personally and privately at 1-800-432-1022. Harold's auction site is hsfineauctions.com. And our featured diamond this week is a 1.30 carat cushion-cut fancy light blue ring. Go to rarecoloreddiamonds.com, click on Featured Diamond of the Week, and you will see one of the most spectacular diamond rings you will ever see in your life. If you get our free weekly newsletter, you can see our diamond there as well. As we tape today's show, the United States reported the job numbers, and really it's getting to a point where no one really believes them anymore. They supposedly gained 295,000 jobs versus an estimate of 235. The unemployment rate supposedly went down to 5.5%. Zero Hedge coming out and saying, did the BLS once again forget to count the tens of thousands of energy job losses? Also, why no wage increases? More than half the jobs added in February were the lowest quality, lowest paying jobs. And another thing to keep in mind, and this is quite scary, Americans not in the labor force rose to a record 92.9 million. That's right, 92.9 million, almost 93 million people currently not in the labor force in the United States. It's a staggering figure. In fact, Zero Hedge says for those, very few now, with even the Fed admitting the unemployment rate has become a meaningless, archaic relic, still wonder why the unemployment rate dropped once again, sliding from 5.7 to 5.5. Well, the real reason is the number of unemployed Americans dropped by 274K, while those employed rose by 96K. The underlying math is that the civilian labor force dropped from 157,000 to 157, and this is 182 to, 180 to 02, following the major revisions posted last month. Well, the people not in the labor force rose by 354,000 in February. Harold, it's just a staggering number, and this really goes to what we've said for a long time. There's so much smoke and mirrors when it comes to numbers that are released by governments all around the world, and you have to be very careful. And we dig, and we have our free weekly newsletter so people can read about these things and get a real understanding of what's going on so they can profit and protect the money that they have. And we advocate, our thesis is, you want hard assets during the times that we live in.
Probably never more important than it is right now, because I'll tell you, all you have to do is read the news, and you're just sitting there scratching your head saying, how in the world is this going on? Again, as far as the unemployment numbers, nobody believes them anyways. Not even the market believes it today, because the Dow is down almost 100 points right now. But as we're taping the show, gold is down 22.60, so we're broke the 1,200 level. We're at 11.76. There's very heavy support in gold at 11.40. We do believe that it will break 11.40 and go to either 1,100 or possibly 1,000. We've been saying this for the last few months, and the reason for that is not that we're bearish on gold. We're not. We're just saying that at this particular point, the market has got to go lower because of the correlation between the U.S. dollar and the gold market. So as we're taping the show, the U.S. dollar is up substantially today. It's up penny point 21, so we're trading at 97.54. To show you how that actually works, the U.S. dollar and the gold market have a direct correlation with each other. In actual fact, when the U.S. dollar is strong like it is right now, the gold prices weaken. And consequently, the opposite happens, that when the U.S. dollar is weak, the gold market gets stronger. And that's never been more evident in this tremendous bull market that we've seen over the past 15 years in gold. When we first recommended gold back in around 2000, the fact is that gold was sitting at $250 because the U.S. dollar was one of the strongest currencies. So basically back then, 15 years ago, when nobody was even looking at the gold market was at $250, and the U.S. dollar was one of the strongest currencies. Well, that all started to change. And as the U.S. dollar started to fall because of several situations, the gold market started to rally. In actual fact, gold went from $250 to $300, and people started to pay attention. When it went to $400 to $500, a lot more people paid attention. And as that was happening, the U.S. dollar was falling from one of the strongest currencies and becoming weaker and weaker. Well, by 2011, 11 years into this bull market, the U.S. dollar had sunk from the strongest currency all the way to one of the weakest currencies. It dropped to 72.5 cents, and consequently, gold went from $250 all the way up to $1,920. That's how important the relationship is between the gold market and the U.S. dollar. Now, after 2011, things happened in the marketplace, and we've discussed that many times before. The reason the gold dropped from 1,900 down to 11 and change, because it was made to do that. They raised the margin requirements so substantially for gold, it made it so expensive to trade it that all the speculators sold out and the price of gold dropped. And the reason that the government and the exchanges wanted that to happen was because there was not enough gold to back up the futures contracts and the existing exchange-traded fund contracts. So that's why the market fell. It had nothing to do with the fundamentals of the market. So now as we're sitting here, 3 years later, or almost 4 years later, after gold dropped from 1,900 to 11 and change, we've seen the market basically trading in a very, very tight range. And the U.S. dollar is getting stronger and stronger, or should I be saying that the currencies are getting weaker and weaker. The Canadian dollar has plummeted. Back about a year ago, the U.S. and the American dollar were pretty well even. And that's when oil prices were still high. But there's also a direct correlation between the price of oil and the Canadian dollar. And that's why you've seen the Canadian dollar fall so substantially as oil prices have dropped from well over $100 a barrel down to $44 that it hit about a month ago, and we're trading at $50 right now. So if the oil market was to strengthen, and move higher, then we would see the Canadian dollar gain some strength. However, that's not going to happen. It looks at this point here that the Canadian dollar will continue to fall as the price of oil continues to fall. And there's a very good chance that oil could fall into the high 30s or mid-30s before this whole thing is over. So basically, if that is the scenario, and we do see oil go to $30, $35, then look for the Canadian dollar to basically drop another 5 or 6 cents, which would bring the Canadian dollar basically down to around the 70-cent level. And that's what we see happening over the short term. So basically, there is a direct correlation between gold and the U.S. dollar, and there's a direct correlation between the Canadian dollar and oil. And as oil prices go lower and lower, that will definitely push the Canadian dollar lower and will strengthen the U.S. dollar, which is quite strong at this point due to, number one, what I just discussed with oil in Canada, and number two, the fact that Russia is in big trouble financially and oil prices are way down, and all these scenarios are happening all at the same time. So all in all, we do anticipate that we will see further declines over the short term in the commodities market, which is one of the reasons that we've specified over the years never to leverage your commodity position. Don't leverage your gold purchases. Don't leverage your silver positions. Don't leverage your oil or any commodities at this point, because the volatility in the market is just way too extreme. We're buying gold and recommending to buy gold as a hedge against everything that's coming our way. Don't think that the stock market, the U.S. stock market, is in great shape. It isn't. It's not representative. The U.S. economy is not representative of an 18,000 Dow. And in actual fact, I saw a very good interview with Mark Cuban, who's a billionaire, who's the owner of the Dallas Mavericks and very, very well educated in the .com business and that type of business. And basically his comments yesterday were sell your NASDAQ stocks because the market is tremendously overvalued and there's very little liquidity in the NASDAQ at this particular point. And don't forget what the NASDAQ did back in 2000. It made a very strong rally all the way up to 5,000 and then dropped to 1,000. And it's only recently, this week, that it took 15 years for the NASDAQ to get back up to the 5,000 level, and now these reports are coming out that the NASDAQ is in big trouble, it's illiquid, and Mark Cuban is saying that there's no way in the world to be in that market at this particular point. So our recommendations are to be very conservative at this point. Own your assets outright. Own your physical gold. Own your physical silver, and own diamonds. Diamonds could turn out to be one of the strongest investments that we've ever made because of the currency markets. Because of everything that's happening in currencies, diamonds will turn out to be one of the greatest investments. You know, even our Canadian clients last year that bought diamonds, and even if the diamonds haven't increased in price, the currency has, because our diamonds are priced in U.S. dollars. So our Canadian clients that bought diamonds over the last 2 years have picked up 25% just on the currency alone. That's how important the currency markets have been and will continue to be. So as we're taping the show, gold's down 22.60, is trading at 11.75. I anticipate that we will see lower prices in gold, and that could happen over the next 2 months. And then we see this market turning. We see that the gold market will turn out to be one of the strongest markets again, and we think that gold will not only come back and test the 1900 level, but it could possibly hit prices that people have never talked about in the $3,000, $4,000, and $5,000 level. The silver market's down 36 cents. It broke below $16 today at $15.94. If gold drops to 1,000, anticipate that the price of silver will drop to about $13.50. You've also got the oil market down 50 cents today, trading at 50.30. But again, at this point here, we do anticipate that there are huge stockpiles of oil. And watching the numbers coming out of the AP numbers, we're seeing that there are huge stockpiles of oil. And again, I just don't see oil going higher at this particular point. I see that there will be pressure in the oil market. It could push it down to around $35, which again will push the Canadian dollar even lower and strengthen the U.S. dollar. It will also hurt all OPEC and non-OPEC members, and we are going to see a tremendous fallout from this tremendous drop in the oil market. So it's very possible that the U.S. dollar over the short term will hit back to par, which is at $1. It's at 97.54 right now. So again, the reason that we're recommending hard assets, alternative assets, assets that are not paper related, not stock related, not bond related, not anything like that, because those markets have seen a false rally. There's nowhere in the world that we should be sitting with an 18,000 Dow with the U.S. economy the way that it is. There is so much unemployment in the United States. It's crazy. And they still come out with these ridiculous numbers, and the only one that buys them is Wall Street. Nobody else in their right mind would buy the fact that the U.S. economy has all of a sudden strengthened much further than other economies. So the smartest thing to do at this particular point is be very conservative. Don't leverage anything. Sit back and own all of your assets, and don't trade gold and silver. It's not why we own it. We own it because there's going to be massive inflation coming our way. There's no doubt about that. With all the debt that's been created throughout the entire world, and it's now happening severely in Europe, just look what the euro is doing. The euro is down below 110 right now. I mean, the euro is in huge trouble. It's just plummeted. And that happened 2 weeks ago, with the Swiss government all of a sudden buying their own currency and selling off the euro. The other thing to be concerned about is what's happening in the banks at this point. The banks are now offering negative interest rates. That means that if you keep your money in the bank, you're going to have to pay the bank to keep your money there. Who's going to do that? But in Europe, in Switzerland, their negative interest rate is at 0.75%. That means you're keeping big money in the banks in Switzerland, and you're paying a fortune to keep your money in there. I just don't know why people would do that. So, again, Randy, we're looking at extremely volatile and confusing times, and the smartest thing to do right now is to be conservative, not leverage, and own your assets outright. That's what we're recommending. We do believe we're going to head into a new bull market in precious metals and in other commodities, but it's just not going to happen at this point. We've got to see further declines before this market goes higher.
This is the World Financial Report on Radio with Harold Siegel. We're on this morning prior to the Oilers pregame show at 11:30. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak personally and privately with Harold, 1-800-432-1022. 1-800-432-1022. We have an outstanding featured diamond this week. If you go to rarecoloreddiamonds.com, click on Featured Diamond of the Week, you will see an amazing ring. It's a 1.30 carat, cushion-cut, fancy light blue ring. An outstanding investment diamond. Find out more about it. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. There was something that Harold touched on that is very, very important, and that is negative interest rates. It is happening. In fact, Frank Holmes, and he's an expert when it comes to gold and silver, hard assets, he says the central banks of Switzerland, Sweden, and Denmark are now imposing negative interest rates on bank deposits. Analysts at Commonwealth Bank of Australia claim that almost a quarter of the worldwide central bank reserves now carry a negative yield. The risk is that negative rates backfire and could result in even lower demand. Additionally, Citigroup said in a report last month that there are no serious arguments against creating a financial system where nominal rates can be set with equal case and equal ease at negative 5%, if you believe it, negative 5%, as at 5%. And there's a story this week from Bloomberg, and it's a must-read in our free weekly newsletter. Get it from Harold. Get our free weekly newsletter from Harold. We'll send it out to you via email every week. You can go through it in 5 or 10 minutes or spend hours if you want. How much will you pay to park cash at central banks as they go negative? Central banks are stooping to new lows to conquer weak inflation. The monetary guardians of the euro area, Sweden, Switzerland, Denmark, are now imposing negative interest rates on bank deposits or on funds operations that feed throughout the real economy. And as we mentioned, the analysts at the Commonwealth Bank of Australia reckon almost a quarter of the worldwide central bank reserves now carry a negative yield. By confounding the one-time idea that they had to stop cutting borrowing costs at zero, monetary policy makers are seeking to spur spending over saving. They're also, and this is amazing, expecting that currencies will weaken as capital inflows are discouraged. The risk is that negative rates backfire and result in even less demand. They go on to say this could happen if people begin stuffing cash under mattresses, or if rates below zero eat into profit margins of banks or distort financial markets. As more central banks nevertheless begin negative campaigns, economists are beginning to question just how low they could actually go. Analysts at Barclays PLC suggest the answer could be considerably lower than the minus 75 basis points now seen in Switzerland and Denmark. That's because companies and households are likely willing to accept negative rates in return for the convenience of modern banking. And one of the things that, Harold, we really believe in is hard assets. That is our thesis. We've been doing the show together since 2002, and it's our feeling that people, instead of being in a negative rate world where they're actually paying to have a bank account or paying to keep money in a bond, as is the case with Germany. Germany just issued bonds. They were at a negative rate. We believe you could be in a gold or silver, or even more importantly, a diamond, be in a diamond, and you're not going to be in an asset that delivers a negative rate of return over the short or long term.
Exactly, Randy. Again, there's alternative assets that make an awful lot of sense in this type of marketplace. Again, if it was a very strong economy and the stock markets were very strong because the economy was strong and the U.S. dollar was strong and all that, that's one thing. And even in that type of an economy, there are diamonds that go up by 15 or 20% a year. But there are also diamonds that do even better than that when the economy goes bad. So, again, you need to be diversified. You never put all of your eggs in one basket, and this is certainly not the time to do that. But, again, if most of your money is sitting in paper assets at this point, just don't forget what happened in 2008 and 9, and don't forget what happened in 1999 and 2000. We're getting right back to those same scenarios. And, again, unless you're in your 20s and 30s and can withstand, a 15-year downturn in your investment, you need to be able to understand what the risk-reward ratio is and deal with that. Because right now the risk of trading stocks is probably the highest that it could be. And that's not a good time for the general public to be in those markets. This is the time that the experts are getting out of the market, and it's the general public that gets in. We don't want to see our clients and listeners to the radio show making that same mistake.
Our featured diamond this week from rarecoloreddiamonds.com. Go to rarecoloreddiamonds.com, click on Featured Diamond of the Week. It's a 1.30 carat cushion cut fancy light blue ring. It is absolutely stunning. Go to rarecoloreddiamonds.com and take a look at that diamond. Interesting to note, Mario Draghi of the ECB predicts an improving economy when they begin stimulus in the European area, the Euro land. They're going to be starting their quantitative easing, where they're going to be going out and printing money and buying bonds. One thing that is rather interesting this week, it seemed to be that people were talking about Greece. They don't really have enough money to cover their needs for much more than a month. And people are talking about them possibly needing a third bailout. But here we have, and we have about 3 minutes left in our segment here, Harold, the theater of the absurd, Spain, to provide 14% of funds for a third Greek bailout. The ink is not even dry on much of the fought extension of the Greek bailout, so hated in Greece because it perpetuates austerity. And yet here you have a country like Spain that's digging itself out in serious financial trouble, and yet they are going to be, if you can believe it, giving money towards the bailout. And one of the things that was brought up by John Embry in an interview that he did with King World News this week, he thought it was absolutely preposterous. He says, I was struck in the last 24 hours by the news that the Austrian bad bank halted payments on $11 billion in debts, and referring to a hole in their balance sheet of over $8 billion. At the same time, I noticed that in this new Greek bailout that is being proposed, Spain is going to be contributing 14% of the money. So we have the bankrupt financing the bankrupt. This is turning into the theater of the absurd. It's systematic of the fact that the debt crisis, which started in 2008, has not gone away at all. It was really estimated that the global debt has now grown to $60 trillion since 2008. The total debt now comfortably exceeds $200 trillion. So I think this development with the Austrian bad bank should make debt holders everywhere very uncomfortable, because it's systematic of how much bad paper there is out there. And Harold, we do have a story in our free weekly newsletter about that bank. It's an Austrian bank. And what we're looking at, creditors face losses of this Austrian bank, and they're talking about major losses. We're talking about $6.2 billion that was injected into this bank, and now they need another $7.6 billion. And the people that are going to take the haircut, it's going to be the bondholders. It's going to be the people that have money within the bank. We've seen it before in Cyprus with bail-ins. They're talking about doing a bail-in with this Austrian Hypo Alpa Support Bank. It's something that we'll keep track of as that story unveils itself. But that's why we advocate hard assets, gold, silver, diamonds. You don't have to sit in a bank account getting a negative rate of return or putting yourself in a position where you could be in a situation where you have to be a part of a bail-in, where you're saving a bank. Have hard assets. Have gold, silver, and diamonds. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping today's show on Friday, March 6, 2015. Our time is 9:08 Mountain. Our radio show runs on your favorite radio stations, like 630 CHED in Edmonton, normally on Sunday afternoon at 3. But Ron, good morning. Good morning to all the great 630 CHED listeners. We're on from 10:30 to 11. Oilers pregame show at 11:30, game at 1. The Oilers playing the Carolina Hurricanes. And we go back in time, and it doesn't seem like that long ago that the Oilers were playing the Hurricanes in the Stanley Cup final, but a lot has happened since then. And don't forget, we had the time change overnight, too. Clocks went ahead 1 hour. If you ever miss a radio show, the shows are archived and streaming on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You can subscribe to our podcast. Our show is portable. We go anywhere your portable device does. Harold's website for investment diamonds, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022 to connect with Harold about our featured diamond of the week. It's a 1.30 carat cushion cut fancy light blue ring. Absolutely stunning. If you get our newsletter, you can see a picture of it there. Better yet, go to rarecoloreddiamonds.com and click on Featured Diamond of the Week. And you can see this diamond. Harold, tell us a little more about it. It's one of those rare diamonds that would be a great investment piece, but something obviously that you could wear and show off at the same time.
You bet. Blue diamonds are very, very rare, extremely rare, and some blue diamonds, like the higher saturated, like the vivid blues, they've gone up 1,000% in the last 10 years. Try to find a vivid blue diamond today. They're nearly impossible to find. In fact, the diamond turns blue because boron seeps into the ground. So very, very seldom will you ever see a blue diamond. It's one of the rarest diamonds in the world. Rarest diamonds being red diamonds. Very seldom will anybody ever see a red diamond. Maybe every 5 or 6 years one red diamond will come onto the market. They're discovered mostly in South Africa and in Australia. But blue diamonds are the next rarest diamonds, and right after that will become pink diamonds. So the blue diamond, as you can see in the on the website on rarecoloreddiamonds.com or in the newsletter, is first of all extremely rare because of the color. The color is magnificent, and again, a diamond turns blue because boron seeps into the ground and turns it blue. Then on top of that, we set this diamond into a magnificent ring setting, which increases the value of the diamond substantially. So when this diamond ultimately goes to auction, we anticipate that client will buy that diamond and hold on to it for 10 years, maybe longer, handed down from generation to generation. But the price of these diamonds go up more than almost any other asset will. And they can be sold in other currencies, which, as we all know right now, is extremely important because just look what happened with the Canadian dollar within the last year. It's dropped by 25%. So basically, this particular diamond ring is an amazing investment because it will do nothing but go up in value. We put it into a stunning diamond ring surrounded by pink diamonds because blue and pink is a phenomenal color combination. Then we surrounded it with magnificent white diamonds. So the whole ring setting itself is encrusted in in white and pink diamonds, which surrounds this magnificent blue. This particular diamond ring is a showstopper. Any woman that wears this diamond ring, people will not believe what that diamond ring is. And then to hold on to it as an investment, there's nothing better. This particular diamond, again, will go up tremendously in value, and a diamond ring like this could easily increase by 20 to 25% a year, and is a hard asset that nobody knows that you own. The governments don't know it. You can travel with it. It could be sold in British pounds or U.S. dollars. It's just an amazing investment, and as you can see by the picture, one of the most beautiful diamond rings you'll ever see. Blue diamonds have increased by as much as 1,000% in the last 10 years. Back in 2005, you could have bought a 1-carat vivid blue diamond for about $200,000. Today, if you could ever find one, they're about $2 million. So again, blue diamonds have done extremely well, and the same thing is now happening with pink diamonds. Pink diamonds, 95% of them come from one mine, which is in Western Australia. It's called the Argyle Mine, and the Argyle Mine produces 95% of the world's pink diamonds. That mine is getting ready to close. It will close within the next 5 years. Rio Tinto, who owns the mine, just says it's not producing any longer. And these beautiful pink diamonds that have come out of this mine, and there's very few of them. It's a very, very small market. However, these diamonds will do the same thing. The vivid pink Argyles, we anticipate over the next 10 years, will increase by about 1,000%. It's almost impossible to get these diamonds today. They're pricey, but nowhere near what the prices will be in 10 years from now. So we highly recommend one of the greatest investments you could make at this particular time is to own a pink diamond from the Argyle Mine. They're known as the most concentrated form of wealth in the world. They're small diamonds. 95% of them are under a quarter carat. However, these diamonds are extremely valuable. The colors will take your breath away, and investment-wise, they have no rivals. There's nothing that will rival the investment potential of a pink diamond from the Argyle Mine. And if you're one of the fortunate ones to own a half a carat or larger, you own something that barely exists anymore because, again, 95% of the Argyle pinks are under a quarter carat. To get a half a carat or larger is extremely rare and just adds to the value of these diamonds. So not only do we deal in physical gold, but our major business is investment quality diamonds. Yellow flawless diamonds increase by about 15% a year. Those are the type of diamonds that I put away for my children and grandchildren over the last decade or two, and my younger grandchildren, who are 10, 8, 2, and now 7 months, all have diamonds put away in their portfolio in their safety deposit boxes, assets that they don't even know exist. Because when they get to be 28 and 30 years old and they're ready to start in this world, I wanted them to have an asset that would be of value. I could have given them stocks, but we all know what happens with the stock market. I remember my grandfather telling me when I was a young boy, I'm 61 years now, but he told me to buy General Motors stock and put it away for my retirement. Well, we all know that General Motors went bankrupt and the stock went down to pretty well zero. So again, I'm not a big believer in paper assets, and I'm not a big believer in the stock market, but I am a true believer in the hard asset and alternative asset market, and that's where most of my money is invested, not only business-wise but personally. I feel very comfortable in that market. The one thing that the market was missing to make the diamond market a strong investment market was the secondary market to resell them. And realizing that my background is in commodities and I've always traded in the markets, I built the secondary market that resells diamonds. So now our clients that invest in diamonds have a secondary market to resell them. It's called H. Siegel Fine Auctions. It's the only company of its kind, and we hold auctions all over the world to resell diamonds. Now, at this particular point, very few of our clients are selling their diamonds. Most are buying diamonds because of what's happening in the marketplace. With the currency markets the way they are, with hyperinflation just around the corner, and everything else happening with debt levels and everything like that, diamonds will turn out to be one of the best investments you can make. But please don't get lulled into a false sense of security. Most people that deal in the diamond market don't know what they're talking about. They don't have a secondary market to resell it, and just because a diamond is a colored diamond does not mean it's investment quality. There are very few diamonds that are investment quality, and you really need to stick with the very best in order to make the type of money that we're talking about. To own a yellow diamond, it has to be flawless, internally flawless, in order for that diamond to increase by 15 to 25% a year, depending on the saturation of the color. The same thing with pink diamonds. The higher the saturation, the more that diamond is worth, and those are the areas that we lead our clients to, the best quality diamonds that our clients can afford. Now, diamond investing is not for everybody, because the minimum diamond that we sell is $15,000 to $20,000. And then they go up from there. To own a pink diamond today, you're going to invest somewhere in the $40,000 to $50,000 range as a minimum investment. But that diamond in 10 years from now could be 5, 6, 7 to 10 times what you paid for it. So we love what's happening in diamonds. We love how our business is growing. We do a lot of fundraising for charities, and we use our diamonds in which to do that. So, again, the diamond market is just a hard asset, an alternative asset that will do extremely well for you. Then we have another investment available for our clients, mostly for our Canadian clients, that is very conservative but pays a very high rate of return. And it will double your money within 4 years. It's an American-based asset. It's dealing with rough diamonds, which we own our own diamond mines and mine our own diamonds, and we're able to pay our clients 24% a year U.S. I know it sounds too good to be true. I've heard it many times. I know it's a ridiculous rate of return, and we could borrow money cheaper than that. That's not the reason for doing this business. It was to expand a family business that's been in business for 3 generations now, and to include our clients in the business. It's a very conservative business. What we do is we mine our own diamonds from our own diamond mines, and our clients are cutters and polishers. And for our Canadian clients that invest with us, you will double your money in 4 years. And we actually back up the principal of your investment by putting up rare diamonds into the trust that holds the investment. So rather than go into heavy detail, if this is something that is of interest to you, it is available to our Canadian clients. We pay 24% a year U.S. return to our clients. Means, as an example, if you put $100,000 U.S., it's going to cost you $125,000 Canadian. However, we're going to pay you 2% of your investment for the next 24 or 48 months, whichever you prefer. That means on $100,000 invested, American, you're going to get back $2,000 a month U.S., which will be wired directly into your account. When you convert that back to Canadian, you're going to pick up another 25%, meaning that a $100,000 investment in U.S. dollars in my company will net you $2,500 a month Canadian for 24 to 48 months. So basically, if you wanted to double your money with us, if you've lost money in any investment, in precious metals, in commodities, in stocks, in anything, I can make that money back for you in 4 years. If that's of interest to you, give us a call. We'll send you the disclosure. We'll send you all the information from the trust and everything, and it's of interest to you. What it basically gives our clients is a second paycheck. It gives our clients an opportunity to bring in a second paycheck, and because a lot of our clients are retired, and now a lot of our clients are in jeopardy of losing their jobs because of the low price of oil and what it's doing to Fort McMurray and the other oil-producing nations, this is an opportunity for you to bring in some income. The minimum account is $25,000, so it's not for everybody, but it doesn't make sense to do it for less than that. On $1 million investment, you'll get back $20,000 a month U.S. or $25,000 a month Canadian, where if you kept your money in the bank, you're going to get 1 or 2% a year, and soon you're going to get absolutely nothing. In fact, very soon, you're going to have to pay to keep your money in the bank. So, again, we can do a phenomenal job for you. If you've lost money in other investments, we can make all that money back for you in 4 years. If you're retired and you want a second paycheck or a paycheck, we can do that for you because you get paid every single month. So, again, we're very excited about this. This program has been going on in Canada now for just over a year, but it's been in existence for 3 generations that my partners' families from South America have been operating their mining business. So these are the type of assets and the type of investments that we bring to our Canadian clients. You can invest in diamonds. We ship the diamond directly to you. You own it outright, and it can be sold in other currencies, along with the fact that we own the secondary market that will resell it for you. Our pink diamonds we anticipate will increase anywhere from 5 to 10 times what their value is today over the next 10 years, and I don't think there's another investment in existence that will do what we're doing in the diamond business. And that's what's going on, Randy.
RareColoredDiamonds.com. Connect with Harold at 1-800-432-1022. 1-800-432-1022. Featured Diamond of the Week is a 1.30-carat cushion-cut fancy light blue ring. See it at RareColoredDiamonds.com. Click on Featured Diamond of the Week. I really encourage you to get our free weekly newsletter. We send it out via email, free of charge every week. You can go through it on your smartphone, your iPad, whatever portable device you have, your obviously laptop or desktop. You can go through it in minutes and be completely up to date. You work hard for the money that you bring in, and our goal here is to help you profit and protect the money that you make. You work so hard, keep yourself educated as to keeping that money profited and obviously profiting and protected at the same time. Now, in our free weekly newsletter, a great article, Pink Diamond Lovers Flocking to a New Gold Coin. Check that out. And colored diamonds are an investor's best friend. For those that may be listening to our radio show for the first time on CHED, because we're on early this morning prior to the Oilers pregame show, you definitely want to see some of the interviews that Harold has been a part of. He was on Fox Business News, speaking with the folks at Fox, Deirdre Bolton, about investing in diamonds. Also, he was on Bloomberg twice. He's been on Bloomberg Radio. And if you really want to understand Harold Siegel, the man, watch an hour-long interview on the Jerry Bovino Show. We have those interviews, and we'll be happy to send them out to you. All you have to do is speak with Harold at RareColoredDiamonds.com or 1-800-432-1022. 2 things to note as well. We have a great report from Bain & Company, Diamonds, Timeless Gems in a Changing World. And they're saying due to what's happening in the world today in the Far East, meaning China, Asia in general, and India, diamonds are becoming more popular over there, and there are less diamonds to go around. It will mean prices will appreciate. We also have, and this is Harold's company, Diamante Atelier, a great catalog collection for 2015. We would love to send the PDF file catalog out to you. It is in our newsletter. You can see it there. But definitely take a look at our featured Diamond of the Week at RareColoredDiamonds.com. And when you go through the list of why you want to own naturally fancy colored diamonds, number 10, their value and rarity is recognized globally and can be sold in any currency. Number 9, the easiest, safest, and most discreet way to transport wealth in the world. Number 8, they are not directly tied to a global market, which safeguards against market uncertainty. Number 7, less than 1% of all colored diamonds mined are considered investment grade. 6, colored diamonds are the most concentrated form of wealth in the world. Number 5, no new mines producing fancy colored diamonds have been discovered. Number 4, colored diamond mines are shutting down without replacements, as we know is the case with the Argyle mine. Number 3, a hard asset that diversifies your portfolio securely and is not affected by volatile market movements. Number 2, based on diminishing world supply, so many experts, and that is in the Bain & Company report, they believe we are going to see dramatic price increases in diamonds. And that will be even further so in rare colored diamonds as opposed to just white diamonds. The number one reason fancy colored diamonds have never decreased in price in the past 30 years. And Harold, it's something you brought to us back in 2005. In August of that year, you wrote a report, and here we are 10 years later. RareColoredDiamonds.com, the number one website on the planet for rare-colored diamonds, investing in diamonds, and we just have diamonds that are like, really, you're going to a museum online, and we really encourage people to, if they haven't, go to RareColoredDiamonds.com for the first time and take a look around. And Harold, I know that you've become a worldwide leader in the diamond industry since you brought RareColoredDiamonds.com online. And we have helped so many people become involved in this market, and so many clients have done well financially as a result of investing in all the different diamonds that we have offered.
Well, thanks, Randy, but that's very, very true. The diamond market has really grown, especially the investment aspect of it over the last 10 years. And a lot of that has happened primarily because of the secondary market that we built. People within the industry, the cutters and the polishers and the miners, know how successful the diamond business is. I mean, they've been in it forever. But the fact is that the general public really never knew because they never knew of a way to resell it. Yeah, anybody who's bought a diamond from a retailer and went back 5 years ago and tried to resell it have always received less money for it. So how could a diamond be a good investment if after 5 years you went back and you couldn't sell it for more than what you paid for it? First of all, most diamonds are not investment quality. And second of all, you don't buy from a retailer. In actual fact, one of the divisions of my company sells to retailers. So the fact is that when we offer diamonds to our clients, they're at dealer prices. So we'll offer at dealer prices the same price that we will offer to our dealers or our retailers that put them in their stores. But again, a lot of the retail stores will not sell a yellow flawless diamond. They don't have the market for that. They'll sell a yellow diamond, but a yellow diamond that's an SI1 or an SI2 is not considered investment quality. It's got to be flawless in the yellow department. As far as pink diamonds go, you want to own an Argyle pink, or you want to own a pink in general, because once the Argyle mine closes, and they produce 95% of the world's pink diamonds, so even though 95% of all the pink diamonds in the world will be off the market, how valuable do the other 5% become? Because that now represents 100% of the marketplace. So I just love what's happening in the diamond market. And again, realizing the fact that we built the secondary market that we sell to makes our clients much more comfortable to deal with a firm like ours.
We are minutes away from the Oilers pregame show. Oilers playing the Hurricanes. Pregame show at 11:30 and game time 1 o'clock. And it's interesting, in our free weekly newsletter, I did put in a little bit of a kicker story. The 19 richest people in sports, one of them, number 11 on the list, Oilers owner Daryl Cates. He's worth $3.3 billion. And Daryl, if you'd like to take a look at our featured diamond of the week, we'll be happy to offer it to you. It's a 1.30 carat cushion-cut fancy light blue ring. It's absolutely stunning. Check it out at RareColoredDiamonds.com, RareColoredDiamonds.com. And Harold, we have approximately a minute and a half left in today's show. Now is the time where we're seeing people putting paper assets into bank accounts, basically paying with a negative rate of return to be there, getting bonds with a negative rate of return, and we think there is a better way.
You bet. And again, I'm very excited about everything that we're able to bring. In a world right now where investing is so difficult and so volatile and so risky, we have investments that are very conservative but still pay out high rates of return. Please give us a call to inquire about our investment in rough diamonds that pays 24% a year. We'll be happy to sit down with you and explain it to you and show it to you in black and white. It's a business that we've been in business for 3 generations now, and it's something that we're bringing to our Canadian clients.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Don't forget, Harold's website, auction website, is hsfineauctions.com. Take a look around there. His main website is RareColoredDiamonds.com. You can speak personally and privately with Harold. He has an open invitation. He'll speak with anyone at 1-800-432-1022. And pregame show, Oilers and Hurricanes next. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.